Today, I'm going to be teaching you how to identify one of the best points of confluence I use in my trading every single day. This point of confluence is going to show you the exact moment that trend flips intraday, so you know whether you should be looking for longs or shorts. And once you learn this point of confluence, it will open the door up to be able to do so many more things like use standard deviation. Now, I will not be talking about standard deviation in this video. However, I will be doing one of those videos in the future. But before we can talk about marking out standard deviations, we have to talk about this point of confluence, because if you don't know this, you won't be marking your standard deviations correctly. So with that said, let's get into the point of confluence we're going to be talking about today, and that is going to be CISD. Jordan, what is a CISD? Well, this is a change in the state of delivery. A lot of you guys have probably heard me on Spaces or the live stream talk about CISDs or change in the state of deliveries. This is something I'm literally using every single day. So we're going to start off with the actual definition, and then I'll dumb it down a little bit for everybody. But the actual definition of a change in the state of delivery is a sequence of one-sided delivery candles gets interrupted and cleanly closes past the opening price or origin of the prior delivery leg. So to dumb it down, all that really means is a series of up-close candles gets closed below the opening price of that first up-close candle. And same thing vice versa. The series of down-close candles gets closed above the opening price of that first down-close candle. It is the exact moment market momentum flips from buy side to sell side or vice versa. Now, if that still sounds complicated, don't worry. We're going to go into some real chart setups and actually show you what these look like. But before we can even do that, you need to know the actual definition of a change of the state of delivery. And to go even deeper into why this is so important for me, it's because this literally shows me the exact moment and the exact area that trend actively is flipping. And to me, that's very useful. So with that said, let's get into some chart setups. I'm actually going to go to an example from today. And what I'm going to do is I'm going to start off on the daily chart. Something to remember is context is everything with this. So that means you don't want to be going and just taking every random series of up close candles that gets closed below and series of down close candles that gets closed above. We only want to be identifying these change in the state of deliveries in key areas aligned with the bigger time frame. So if we're looking at a bigger time frame, we can see this morning on a daily chart, we opened up and we actually swept out previous day low. That is a big sweep of liquidity, and that is key for change in the state of deliveries to actually work. Without a big sweep of liquidity, there's no actual context here. So remember, make a note of that. We're not just taking, random series of up close candles that could close below and vice versa. We're only looking for those change in the state of deliveries in those high probable areas. So knowing that we swept previous day low, then I can go down to a 5-minute chart from earlier today. And we can also see after sweeping those previous day lows, we have a 1-minute or 5-minute sweep of liquidity to the left. And then after that, what do we see? We've been downtrending all morning until what? Until we see this series of down closed candles that swept liquidity get closed above on this candle. So I'll mark it out for you guys to make it super easy. The change in the state of delivery would be here on the 5-minute chart. And you can see once we actually closed above that opening price of the series of down closed candles, price completely reversed all the way to pre-market highs. So again, very, very simple. A series of down closed candles gets closed above the first candle's opening price after sweeping liquidity to the left. That would be a valid change in the state of delivery, and we could look for price to go higher. Again, context is everything. Having that sweep of liquidity is very important, or else you're going to get caught in failed setups, change in the state of deliveries happening that aren't actually valid. So this is an example of a bullish change in the state of delivery. Let's look at an example of a bearish change in the state of delivery. So on to the next example. I'm on a 2-minute chart in the pre-market of Monday, July 27th. This is the day that we were tapping into previous day highs. So we were sweeping a previous day high, and we were also tapping into a daily bearish for value gap. Those that have watched my video on my pre-market routine know exactly what my bias is for the day. If you haven't watched that video yet, go click somewhere up on the screen. It'll be up there for you. But if you've watched that video, you know my bias going into the day is already bearish. We're tapping into previous day highs. We're tapping into that daily bearish for value gap. But how do I get that confirmation on the lower time frame that order flow is actively flipping? Well, you see price in pre-market pumping to the upside, and we ended up taking out previous day high during this run up. We also took out these lower time frame highs to the left, and we can zoom in and see our series of up close candles gets closed below on this candle, but I actually would wait till this candle, and I'll explain why. Another thing that's key for changing the state of deliveries to work is seeing displacement. What is displacement? Well, displacement is speed over highs and speed under lows, and ideally fair value gaps opening up. So if I mark out this change in the state of delivery here, again, why is it here? Well, this is the first green candle of the series of up close candles that gets closed below. zero. So that becomes my change in the state of delivery to the downside. But on this candle closure, even though we do slightly close below, I'm not fully convinced yet. We're not seeing speed under lows. We're not seeing any fair value gaps open up. So it's not until this candle that I actually have confirmation of this change in the state working. And then I can end up, putting my entries at that change in the state, risking the high and looking for a 1 to 2 hour trade or something like that. Now, please keep in mind, guys, that this is not 100%. And that's why I say context is so important, because if you are in line with the higher time frame narrative, you have a much better chance of these actually working out in your favor. But you can look to the left and actually see that this change in the state failed, right? We ended up pumping and taking out this high. So there will be failed setups, but if you're truly aligning yourself with a higher time frame, you will have more winning setups than losing. And I also say that this is just one tool in my toolkit, right? This is one piece of Confluence that I'm using out of many. And so I would say if you are going to use this, right, add it into your arsenal, your toolkit of what you're already doing. Don't just use it alone. Another thing to keep in mind is to be patient and wait for those entries, especially if you are using the change in the state as an actual entry model, because a lot of the time you'll get the confirmation of the change in the state actually starting to work on a candle like this. But when this candle closes, you want to chase price because you think it's just going to dump further. The smarter option is to wait for a back test of that change in the state of delivery. Now, that does mean you're going to miss out on setups because you're not going to always get that back test. Sometimes the market is really in a hurry and it just wants to get to its target and it never does back test. But those are generally the highest quality entries when using change in the state of delivery. Another thing to keep in mind is you can find these on pretty much every time frame, right? I showed you a 5-minute, I'm now on a 2-minute. Price is completely fractal, so these can be found on every single time frame. If you're just starting out, a 1-minute and 5-minute is totally fine until you get comfortable with it, and then you can venture out to different time frames. Let's look at one more example of a CISD with lots of displacement. So you can see here, we've been downtrending. You can actually see a clear change in the state here. That's a very, very clean change in the state delivery, sent price to the downside. We were trending to the downside until we got close to this gap. And then if we zoom in, we can see price swept liquidity to the left. And we see our series of down close candles get closed above here on this candle. You're seeing speed over highs and fair value gaps being created. You have a fair value gap here and you have a fair value gap here. Now, a lot of you might be saying, but Jordan, you never retested the change in the state. If you draw it out, if I have my limit orders there, it never got to it. You're right. And this is where using change in the state, it should be just another tool in your toolkit. If I was trading at this time, I would have noticed the amount of displacement that we're getting here. We're not only creating a change in the state here, but we're also breaking over all these previous highs and creating a massive fair value gap here. With that and with my trading knowledge, I'm able to understand, okay, we probably don't need to come down to this actual change in the state of delivery. I can use this fair value gap as an entry and risk under this change in the state of delivery. And that change in the state can be my defense. So again, it's all best used in context. It's best used as an extra tool in your toolkit, but it can be really useful if you're trying to nail exactly when trend is flipping intraday. So again, guys, I'm going to remind you some notes to write down if you are looking to trade the change in the state of delivery or use it as a point of confluence in your trading. Number one, you need some sort of big sweep of liquidity, whether that's a high probable intraday level or a previous day low or high, and you need to see displacement. What is displacement? Speed over highs, speed under lows, and fair value gaps being created. And the homework I would assign to people that are wanting to go practice this in the charts, and the same thing I would tell myself if I was telling myself to go do homework, is go back on your chart, find these higher time frame sweeps of liquidity, these bigger sweeps of liquidity in areas that you think the market's going to reverse, and then try and identify the change in the state of deliveries that happen after those big sweeps of liquidity. Screenshot them, put them in your journal, take notes of the ones that did really well, take notes of the ones that failed, right? Why did they fail? Were they lacking displacement? Did they have displacement, but we didn't have a big sweep of liquidity? These are all things to make note of and study so you can become a better trader and be able to identify these things when they're happening in the market and capitalize on them. With that said, I think I'm going to end the video here. I hope you guys enjoyed the video. If you made it this far, make sure you like the video, subscribe to the Wolf Trading channel, and if you guys want a video on standard deviation, which incorporates using the change in the state of delivery, let me know in the comments and I'll get that video for you guys out in the future. But with that said, I'm going to get it wrapping up, but appreciate everybody making it this far, and we'll see you guys in the next one.